Hi folks, and welcome to this video on reporting income. So today we're going to talk about two concepts, one that's familiar to you, which is net income and its calculation, just as a little bit of a review. And then we're going to show how net income is related to another amount that you commonly see on statements produced under International Financial Reporting Standards, or IFRS, and that's known as comprehensive income. So let's begin. First of all, we have a few objectives here for this short video. Just a little refresher on how to calculate net income, and again, the new piece, how comprehensive income is calculated. And we're going to describe also how net income and comprehensive income are related. The other thing we're going to talk about here is that there are two items, and there are more than two, but for our course, we're only interested in two items that under IFRS are included in what we call other comprehensive income. Other comprehensive income is part of this amount called comprehensive income. So we'll talk about that too. And we'll also describe how comprehensive income and accumulated other comprehensive income, which is on your balance sheet, are related. So let's begin. So first of all, I'm just going to show you some accounts and how they're related. A little bit of this is a review because we know from our previous courses that any revenues and expenses and gains or losses that you might have on the sale or retirement of bonds, investments, property, plant, and equipment, those types of gains or losses, we've seen in previous courses that they wind up in net income, and net income gets closed out to retained earnings. So we see that net income updates retained earnings on the balance sheet. Similarly here, we're going to talk about gains and losses, some of which are captured not in net income, but as part of other comprehensive income, which is part of your comprehensive income. So we have other comprehensive income, and this amount updates a new account that we see in our course, accumulated other comprehensive income. So just as net income updates retained earnings, other comprehensive income updates accumulated other comprehensive income. So this is a new relationship, what OCI does to AOCI, that we're going to learn throughout our course. And then net income that you would normally calculate plus any other gains or losses, and we're going to talk about how those can happen in a minute, any other gains or losses that under IFRS need to go into OCI or other comprehensive income, these two amounts together, net income and OCI, give you comprehensive income. So now, what kinds of things are in OCI? Well, in our course, we're going to talk about one in particular as we get further into the course. We have gains or losses that are being that are considered holding or unrealized due to changes in fair values on certain investments. All right, these certain investments would be share or equity investments, and these investments are investments in the shares of other companies. So we're talking mostly here about investments that are not short term, they're longer term, but not so long term that we're going to control the company for years and years and years or influence its decision making. So the idea here is there is a certain classification of investment where gains or losses don't go into net income, they go into other comprehensive income. And we're going to talk about them a little bit more later in the course. I just wanted you to realize that those kinds of investments do exist. And something you might talk about in your other intermediate accounting course, not in ours, but in another one, another thing that gives rise to other comprehensive income are any gains and losses that are created when you revalue property, plant, and equipment assets. That could be building, land, equipment, any of those things, to their fair value. In some instances, companies might report those gains and losses under OCI as well. Our course deals largely in a later chapter with the investments piece, but let's just move on from here. So now, what do we know? Comprehensive income is made up of net income plus any other comprehensive income where we have a net gain on the sale of those or on the holding of those investments that are considered to be have gains or losses under OCI, or we would deduct any unrealized holding losses on those investments that we talked about here, these guys here, any holding losses that on investments that are not passive or temporary, but not so long term that we're going to keep them forever and a day, but they are considered non-current. So if we have any losses on those things from holding them, they would deduct or minus or create negative or a loss in other comprehensive income, potentially. So net income plus OCI or net income minus OCI is going to give you comprehensive income. So now let's just compare the income statement to the statement of comprehensive income again. We know revenues less expenses on your traditional income statement gives you net income. In the statement of comprehensive income, it starts off with net income. We add to it any other comprehensive income gain. So in our case, we would be looking in our course at any unrealized gain for holding investments that are fair value through OCI, where the gain goes into OCI. Or we would deduct from net income any OCI where we have a net holding loss created for these investments that we're holding. All right, and again, net income plus or minus OCI would give us comprehensive income. All right, so again, if we're looking at the relationship between income and shareholders' equity, we know that revenues, expenses, gains, or losses, and that would include unrealized as well as realized gains and losses on current trading securities. These are securities you trade all the time. So if a company bought shares in other companies, they can buy or sell them regularly. We learned that those kinds of things go into net income. And we also know that net income through the closing process updates retained earnings. Well, the same thing happens with other comprehensive income. Any gains or losses, which include all of those holding gains or losses on certain investments, and those are those OCI investments that we'll talk about later, and any gains and losses that are created if you revalue property, plant, and equipment to its fair value, those things adjust OCI. So gains here in the red and in the blue, you can see the gains would increase OCI, and any losses that we refer to here, any losses would reduce or give us a negative amount in OCI, and that OCI gets closed out to update AOCI. So again, net income plus or minus any OCI gives us comprehensive income, and retained earnings plus any AOCI or minus if it's a net loss in your AOCI account, that would give you your shareholders' equity. So this concludes our video on reporting income and comprehensive income. I hope you found it helpful.